All right, let's jump right into a real head scratcher, the spring 2024 housing market. You hear about these sky-high mortgage rates, but then, on the other hand, it seems like the market is really heating up. It's this puzzle of contradictions, and today we're going to try and piece it all together.
So here it is, the central question right up front. How is it even possible that buyers are flooding into the market at the exact same time that the cost of borrowing money is climbing? I mean, it just feels like that shouldn't work, right? But the data is telling a really fascinating story. To figure this puzzle out, we've got to start with the hard numbers. We need to look at what was actually happening on the ground back in March. This data, this is the foundation for our whole investigation. Okay, so when you first look at this, it paints a picture of a pretty healthy market. The typical U.S. home value, it's up a bit from last year, sitting at over $365,000. And we're seeing more houses for sale. Inventory's been up for 28 straight months. But check out this last number. Homes are selling fast, like going under contract in just 19 days, which is 9 days quicker than in February. So on the surface, everything looks pretty strong. All right, so let's get into our first set of clues, and they all point in one direction. The spring market came in surprisingly hot, way hotter actually than a lot of people were expecting. And wow, this number really tells the story. This is the jump in newly pending home sales just from February to March, almost a 30% increase. That is a massive surge in activity in just 1 month. And to put that into perspective, this wasn't just a pretty good month. It was the biggest March jump we've seen in 5 years. We're talking a spring surge on par with what we saw before the pandemic. And this momentum wasn't just some 1-month fluke either. If you compare it to last year, pending listings were up 4.6%. So that shows a steady year-over-year strength building in the market. And get this, it's not just sales. Buyer interest is through the roof. The number of people just looking at listings on Zillow, up 32% from last year. People aren't just window shopping, they are actively out there trying to find a home. So the takeaway here is crystal clear. Buyer demand is incredibly high. But, and this is a big but, here's where the puzzle gets really tricky. Because at the exact same time all this positive stuff is happening, we've got our second clue. The financial pressure on those very same buyers is going up. I mean, just look at this climb. In the span of a single month, mortgage rates jumped from just under 6% at the end of February to almost 6.4% by late March. That is a really big and really fast increase in how much it costs to borrow money. So what does that rate hike actually mean for your wallet? It means the typical monthly mortgage payment, and that's before taxes and insurance, hit almost $1,800. That's up 1.5% in just a month. So buyers were looking at a hotter market and higher monthly payments. Which, brings us right back to our main question. With rates and payments going up, what on earth is pushing so many buyers into the market right now? Let's see what the experts have to say. Well, Zillow's chief economist, Misha Fisher, he has one theory. He's looking at all this data and sees something fundamentally shifting. He thinks the market isn't just having a good month. It's actually turning a corner into a whole new, more active phase. So why does he think that? Fisher points to 3 main things. First off, simple, pent-up demand. You've got all these buyers who were just waiting on the sidelines. Second, there were some lingering good vibes from when rates were a little lower earlier in the year. And third, the market was kind of playing catch-up after bad weather slowed things down in January and February. So basically, a perfect storm of reasons driving buyers back in. So, case closed, right? Pent-up demand explains everything, while not so fast. Just when we think we've got the puzzle all figured out, there's a final twist that makes you wonder if this momentum can actually last. Because while one expert sees a market that's turned a corner, another really important voice is being a lot more cautious. Lawrence Yun, he's the chief economist at the National Association of Realtors, and he is looking at the exact same data and coming to a very different conclusion about what's next. Let's just look at this side by side, because this really gets to the heart of the whole thing. On one side, you've got Fisher's optimism. The market has turned a corner, demand is solid. But on the other side, you've got Yoon's caution. He's so concerned about rates going past that crucial 6% affordability line that he's actually lowering his sales forecast for the future. That right there is the puzzle. 2 top experts looking at the same information and seeing 2 totally different roads ahead. And that leaves us right here with this final question. We have a market that is somehow both hot and expensive.
We have experts who are feeling optimistic and others who are warning us to be careful. So, what does it all mean for the next few months? Is this spring boom the real deal, or is it just a temporary surge that's built on a shaky foundation? That is the billion-dollar question that everyone in the market is asking right now.